Oh, this has to be the worst earnings call I've ever gone through in my career. And look, I'm a licensed financial advisor. I read earnings calls almost every single day. And this one's bad. I don't know if this is a sign of what's to come in the economy, but that is not a Nike swoosh style earnings call. It's bad. Let's talk about it. This video is going to be brought to you by the paid promotion of short form, but we'll talk more on them later. For now, let's get into it. Promotion, by the way, will be 20% off with short form by going to shortform.com/meet Kevin, link down below. Stephen Forbes, an analyst, asked the CEO, can you talk about an inflection point within the business? And here are some of his responses. Sure, I think based on the times we're in and uncertainty we're facing, whether it's the continued rise of interest rates or the next bank or two that get hit, it's hard to be anything but conservative right now. I think it would be foolish to be not just from the perspective of disappointing investors, but disappointing ourselves and possibly making decisions and investments before we could see around the next corner. You hear this? Rein in. Don't spend more on CapEx. Rein in. Get small. Get scared is what he's saying, because we haven't seen around the corner yet. Because instead, he talks about it's a very unsettling feeling. It's like the days of Bear Stearns and Lehman Brothers. And we're just waiting for the next shoe to drop. It's very unknown right now. So we believe that there will be an inflection point in the second half. Notice he doesn't say good. We don't know what it is. What will the economic environment be in the second half? What would be the condition of the banking industry in the second half? Where will interest rates be? What if inflation is persistent? All one has to do is Google the history of the Fed's funds rate and zoom into the 70s and 80s and look how many times the Federal Reserve brought inflation under control. Yes, Mr. CEO, let's completely ignore that in the 70s we left the gold standard and we let inflation expectations unanchor, and the Fed had a start-stop mentality that led to a lack of confidence for the Federal Reserve. Let's completely ignore those things. And let's just talk about the fear of the 70s and 80s, how basically we have to not spend money anymore because we don't know what's around the corner. This is literally a CEO that wakes up and probably loses sleep at night and then wakes up in the morning trembling that this company is going to poopsie doopsie. This is Restoration Hardware, by the way. And I mean, if you just look at their earnings, right here, you can see their margins are starting to get hit. You know, over here on the right side, you've got their past margins and their income from operations at 14.5%, way down from the over 20% we used to see. Their net income is down about an average of about 3 percentage points over here compared to the past reporting quarters. So you could tell there's a numbers reason why as well. But let's keep going with what he's saying, because he starts getting a little angrier. There's not, oh my God. Hello, grammar. There are not many people. Do you know they should really have a word there, right? Like it should be there, like that. That should be a word. It should be pronounced there. There are not many people on the planet. See, that would be good grammar, a shortening of there are, but that's how it should be written. But that doesn't exist. Instead, people get lazy and then they just say theirs because there's no contraction for there are. That's kind of weird, isn't it? Anyway. In this context. Okay, so continuing. I don't know why we go on these grammar tangents. There are not many people on the planet in levels of authority and responsibility that were old enough to experience those times. And I think having a conservative view and being prepared, having a strong balance sheet and trying to see the whole board and all of the moves is basically prudent. Okay, that's fine. So he's making the argument that we're so scared at Restoration Hardware, we're going to basically compare this to the 70s and 80s and try to buckle up as much as possible, which is not a bad idea. It is not a bad idea to say, hey, let's pause and let's make sure we could rein in to make sure we're not running away and spending all of our money and not being conservative to where then we have to get emergency debt, right? That would be very bad. I'm sorry if you're sending me promotional emails every day, if not every day, multiple times a day, calling them different things. You want to call your promotion something different? That's interesting. He's starting his little lash out right now. We're not pushing the panic buttons on promotion. I wouldn't call it panic kind of promotions. It's really trying to hang on to the illusion of where the business was in the pandemic, right? Okay, now this one's pretty emotional, but before we keep going, I want to bring up a short form, our sponsor for the video. Thank you to a short form. Meet Kevin is the code you want to use to get 20% off. Scratch that, it's actually 25% off. I negotiated a higher discount for you. 25% off. You'll see that on the website when you go there. The easiest way to do that is just click the link down below, go to shortform.com/meetkevin. To me, this is the best inspiration I possibly could find to determine, do I want to buy the original hardcover book, the softcover book, the audio book? Because really this is like a supercharged summary style app. For example, one of my favorite books, Good to Great, put together by a former Stanford business professor. This guy's name is Jim Collins. He's amazing. He goes through case studies on 11 different companies and track their market performance to see how did these companies 3x? What kind of leadership and discipline did it take to get these companies to 3x? And see, what really excites me about short form is you could get sort of a super powered book summary that doesn't take away the lessons within the book, but it gives you an idea of, okay, is it going to be worth buying the rest of the book? And I find a lot of them are. First of all, these super powered book summaries are awesome. They've got categories on business, entrepreneurship, money, finance, career, success, productivity, health and well-being, you name it, communication. These are all great. But then it can let you kind of dabble in each of those categories. And then if you want, you can go grab the full audiobook if you want. But in terms of short form, wow, even if you just short form one book a day, wow, you're gonna be miles ahead of the competition. So check out short form. Go to shortform.com/meetkevin and you'll get a special discount using that link. It's on promotion. I wouldn't call it panic kind of promotions. It's really trying to hang on to the illusion of where the business was in the pandemic, right? So in other words, he's starting to allude to how they are different from other businesses. They're saying, we're not going to do promotions because we're Restoration Hardware and we're fancy and better than promotions. And then he's starting to compare to other businesses that are sending promotional emails every day, sometimes multiple times a day. He can smell the fear at other companies because they're freaking out and they got to get more sales. Well, take a look at this. I have never, ever seen a CEO pull this one. So listen to this. So, and that's even in this environment, and the product that's on its way is by far the best work we've done. Talking up their business, okay, great. How they have a value proposition and they don't have to send all these disruptive promotions to people that are below us. Wait, what? And I think that will be disruptive, not only to the high end, it's going to be disruptive to the people that are below us in the market, just because we have the scale to buy in-stock inventory and many people don't. In other words, you really have a CEO who's literally like, we don't spam people with promotions. We aren't going to suffer like the people who are below us because we're the high-end corporation. And then listen to this, literally goes on to name a company by name and bag on them. You ready for this? Here we go. The platforms that are out there today, whether it's a Wayfair or others, again, I understand they don't take the position we have on inventory, so they can't really buy in volume because they're the paupers, they're the poor normies. So, continuing with the quote here, so because they can't buy in volume, they can't drive efficiency. So a lot of people say, well, aren't you worried about platform? So I think platforms ought to be worried about us, you know, like those website platforms, they should be worried about Restoration Hardware. There's not a platform that made $1 yet or anything. I mean, Wayfair made money during the peak of the pandemic, for God's sake. No. And look, may Wayfair be able to hike their prices and make it? I don't know. All I know is we've got a really great model. We've got, I think, the most compelling vision in the industry. The guy is literally dumping on Wayfair, saying they only made money during the pandemic. And basically, Restoration Hardware is so much better because they have scale and they have a reputation and they have a brand. And but at the same time, we're worried about the 1970s recession, and we're worried that, listen to this, I think it's more uncertain today than 2008 and 2009. If you didn't have the inflation problem that we had today and you didn't have the political unrest, maybe it would be interesting, but you do. And so if there isn't a complete crash, which a complete crash would look like the 70s or 80s, which would ultimately mean it would take over a decade to recover from the recession, then maybe we could pray for not a complete crash. But this is what we want to prepare for. So, I kid you not, Restoration's Hardware CEO is losing his SH9T. He is literally losing it. Lashing out at the competition, lashing out at promotional emails, and lashing out that basically we're walking into the 70s and 80s. And as a result, they're going to pull back on spending. That's crazy. So look at this. In a typical environment in a slowing market, there's usually one thing to hit us at once. But multiple things are hitting us at once now. Look at this. Listen to this. Yeah, I think you've got about a 20% margin floor. Not in the worst housing market, though. Right now, we're in the worst luxury housing market I've ever seen. One of the worst housing markets anybody has ever seen. I think in the third quarter, luxury housing, fourth quarter luxury. If you think about where luxury housing has been, it was down 18% in the first quarter, down 28% in the second quarter, down 38% in the third quarter, and now reportedly down 45% in the fourth quarter, which means because you're talking about months, they're kind of going down. It probably means the last month of the fourth quarter was down close to 50%. Then you've got the refinance market, which nobody's refinancing, so nobody's able to buy new furniture. And that means the market's really down like 80 or 90%, or 70 or 80%. Oh, man. This is by far the most comical but also kind of scary earnings call I have ever seen. This is the CEO of Restoration Hardware. But then listen to this. We're cutting through the noise. That's what we're doing. We're not panicked. We're not nervous. The biggest joke ever. And then he even goes on to say this. Do I wish yelling, we'll just tell everybody we're gonna backstop everybody's savings and dance? In other words, do I wish we could just go back to the stimulus days? Of course! But I think instead we might be facing more of the 1970s. This is by far I don't know whether to be scared or to think the guy has just lost it. Now, after I went through the earnings call, I took the entire script, the transcript, and I put it into ChatGPT, and I asked ChatGPT some questions about it. I asked ChatGPT specifically, hey, does the housing market affect Restoration Hardware? And it replied, of course it does. Well, essentially, it said, yes, the CEO suggests the housing market is affecting Restoration Hardware. He mentions that the luxury housing market has experienced a record fall-off, which has impacted their business. He also mentions that when the housing market is down, it takes about 3 months for it to completely hit them and for that damage to settle in. I thought that 3-month delay was actually pretty insightful. I personally missed that in the transcript. He also talks about how building a luxury brand takes time. Now, a ChatGPT refused to imply that this CEO was bashing Wayfair. He says that a Wayfair is not implicitly discounting. I kind of think that's pretty much exactly what the CEO here was saying, just saying it in different areas. So maybe that's where artificial intelligence, just not yet, is in the context awareness space. Like if you go from talking about how bad discounting is and making fun of people who are discounting, and then all of a sudden you talk about Wayfair, who did great during the pandemic, the AI is not realizing, okay, come on. It's a direct slam, okay? It's basically a direct slam. So it's kind of interesting to test the ChatGPT, and what I did with this is I read it first, obviously. I made my commentary first, and then after all of that, I put this all into ChatGPT. I even tried asking ChatGPT to see if I could trip it up. Hey, did the CEO make fun of anyone? No, they just talked up their own strengths. Okay, all right, ChatGPT. So there were some things that ChatGPT found, specifically that 3-month lag time that I missed. But when it came to that actual human element, that implication element, ChatGPT didn't quite get there yet. So If you found this video helpful, make sure you check out the link down below, shortform.com/meetkevin. It's a phenomenal product. Yes, it is a paid partnership. And of course, that link is right next to the programs on building your wealth, link down below. While I am a financial advisor, none of the information is designed to be personalized financial advice. It's supposed to be broad to get you started on your path to becoming a real estate millionaire. Zero to Millionaire Real Estate Investing course and the Stocks Insight course are the most popular. See ya in the next one. Thanks so much. Bye.
Game.